Hey, welcome to part 3. I hope you've been studying a few charts and putting some of this together already. Let's continue. So price patterns. Price patterns can form in an endless number of ways. So don't get caught up in thinking that there's only going to be one pattern that you're going to trade. While it is possible to do that, it could be a very long waiting period between the next trade and the one you just finished. So let's look at a few high probability patterns that we use on a daily basis. So the first one is just a simple type of a pullback pattern within an uptrend. And let's just look at all of these at the top as if they're in uptrends and they're pulling back to areas of support, and there's something to the left over there, some congestion area or minor support, and prices pull back, momentum begins to slow down. And now you're going to apply your bar-by-bar analysis. So let me just do a little drawing here. Can you imagine if this green bar had a bottoming tail bar on it that cleared this low and immediately came back up again? And this is in an uptrend in an area of minor support. What are you going to do next? If you said buy above the high, you got it. You're absolutely right. Well, what if the next bar wasn't one that took out the high, but rather it was one that was a red bar? Well, that could suggest it might go down. But what if it took out the high? We love those at Master Trader. Bottoming tail bar, slowing momentum in an area of support, and then a red bar that would be ignored where prices would take out the high. You're a buyer, looking for prices to go back up again. Other times we're going to get price patterns where we call them a retest and failure, where prices come down, you get a turning point, and then you get a retest. Pretty simple pattern. Just a larger corrective pattern that's occurring over a period of time. As always, look to the left. Do you have multiple trend frame alignment? Other times, prices are so strong that they don't pull back at all. And when that happens, we get what we called a flag type of a pattern. They usually have a little downward sloping type of a move to them where, bar comes down and maybe made a little bit lower low, and it comes right back up again. Point is, they don't pivot. You remember the pivots? What's a pivot? A bar with 3 higher lows to the left and right. That creates a little support point. But here, in this example, the demand is so strong that it won't pivot, and it flags. And that's a very bullish pattern. You look to be a buyer. Here, we've got multiple retests. So we've got this larger bottoming pattern. And here we look for red bars being ignored and bottoming tail bars. And many times, you get a wide range bar igniting out of the base. So same analysis. Is the trend up or down? It could be in a wide whippy range. We haven't covered that, but it could be in a wide whippy range. The key is there a void there? But the wide range bar is the igniting bar that says to go long. We can get the same retracement patterns in a downtrend, same type of analysis. This could have had a topping tail bar on it. A retest pattern, a topping tail bar, and a retest and a reversal. We look to sell short, looking for prices to go down. We can get bearish flags where there's a momentum move. It doesn't pivot, just trends back up a little bit. Just this upward sloping kind of a move. And sometimes you'll see others draw channels and then look for the break of the channel. We look at bar-by-bar analysis. So possibly where you've got a green bar that moved up and then immediately was followed by a red bar down. We're looking to sell short right there. Here we've got a rounding kind of a top. This can form in different ways. So I might call it a head and shoulders top or a rounding top. In any event, there's attempts to go up and they fail and come back down again. Remember, the trend is down. What's to the left? Wide range bar igniting. You're selling short, looking for prices to go lower. Let's take a look at a chart that's a bit messy, but lots of pretty good examples on here of price patterns that occurred. So this was coming into an area of support. And this is a minor void. We're not really getting much into voids here, but this is an example of a minor type of a void where there was a momentum move up, and it tried to go sideways and create support, but it fails. Now notice this wide range bar. It took out the highs, and now it comes down to this area of support. It's a fast, deep retracement. Well, I'm thinking that's pretty bearish and probably going to go down. But our MTS concept of bar by bar analysis would save us here. It forces us to change. That's the job that it's meant to do. So where this was attempting to go down here, and that topping tail bar looked like it was ready to break, it takes out the highs. That doesn't mean it's totally out of the woods. And we get another topping tail bar, and this one gaps down, and it retraces right back up again. Demand is picking up. I can tell that bar by bar. And our prices move back up again, and it comes into this area of supply. And notice what happens here. This is what we call a breakout bar failure. It's a range expansion bar with a little minor topping tail and an inside bar, and then it breaks the low. Now, we don't go short these, but we do take profits when we see them. And now things got kind of whippy, and prices move up and down. Erratic price action, and you know, looking at this, we can see that things aren't right. Too many large bars, narrow bars, and tails. And then that wide range bar. Remember, the wide range bars are something we scan for every day because they're igniting bars out of a consolidation. Notice that volume. And here it couldn't retrace. That tells us that institutions are continuing to sell. And then it breaks down. It's a simple sell short of a base into the area below where there was little to no support. And we just continue to do the analysis that you're learning here. Let's look at a few other examples. So this is part of the thought process that we've been building. When we look at a chart, we ask ourselves these questions. What is the trend? Was it up, down, or sideways? Are the daily and weekly time frames aligned? What's to the left? Is there a price pattern? So you know how we tell the trend. Is it making higher highs and higher lows? How do we know what the weekly time frame is doing? You remember? That 50 MA is the same as the 10 MA on the weekly time frame. So this tells us that our macro time frame is up. Now things got a little erratic here. As they came out of this base, notice a little tight consolidation area. As the breakout occurred, and then they moved up, everything was just fine. And then there was this nasty little dip that violated our reference point of major support. However, the weekly time frame is still up. We don't want to get too aggressive or bearish because that weekly time frame is up. And then when there was this retest pattern and the move up again, and this is a great example of why at times it takes a little while for buyers and sellers to come to another meeting of the mind, so to speak. Sometimes it happens in a violent way. Wide range bar down, look to the left immediately. Is that an opportunity to sell short? Is there a price void? No, there wasn't. There was that support there. And now this forms what we call a bullish 180 reversal. It springs right back up into that pivot high. And that little bar closing there at the high, that's our signal to get long. Now things got a little whippy again. Something's going on here, either in the broader markets or this stock. But things are kind of erratic. Nonetheless, weekly time frame is still up. Let's give it the benefit of the doubt. We still don't have reason to be thinking sell short. We continue that analysis. Higher pivot low, higher pivot high. Another whip down into the rising 50 MA. Weekly is still up. What do we want for shorts? Well, we want these to have alignment to the downside. We don't have that. and this price pattern is still acting bullishly with some erratic price action. Now here's one that's obviously going down. And you can see I picked something that was around the same time, right, those months. So we can find stocks that are going up and going down in the same periods of time. So things were getting better, right? The 50 got above, the 20 got above the 50, but then something went wrong. That breakout there failed and prices broke down under this support. Now we have a clear example of a short bias. 20 is under the 50 and they're both pointing down. Now, minor support. Turning point. Sell short. Now, it didn't collapse, but swing trading requires holding on for a little bit of time at times. We have our money management. We would have a stop loss in place, but sometimes they don't work out right away. But bar by bar analysis keeps you knowing what is. There were no big green bars up. There were no big bottoming tail bars. It was just a little consolidation at support before the next break, and then the lower pivot high, and the turn down again, the wide range bar. And we just continue to do the same analysis on a continuous basis. Now this one got pretty wild and whippy, and I'm showing you this example because at times these wild whippy patterns, we're going to stay away from that until we get a decisive break. And so that came down to support, and it came back up again into resistance. And would we have considered a short sale on this setup? I'm going to tell you yes, because when this broke and came into this resistance area, we've got multiple times here where this failed, and a little detailed analysis here. That little breakout above the resistance, remember that little breakout bar failure I mentioned? Well, this is kind of the minor example of it, but now we've got the 20 under the 50, and they're both pointing down versus being flat. Moving averages are what we call visual aids. So as they start turning down and the 20 is under the 50, and we've gotten this breakdown, yes, we can sell short a breakout bar failure. This short setup right there in between the 20 and the 50 in an area of minor resistance. We're going to continue this analysis continuously on every chart that we see. Now in this example, we've got an extreme move that's gone up. But however, that did spend quite a bit of time going sideways for a while before things actually moved. Notice the wide range bar breaking out here and that little consolidation and continuation pattern. This is what we call, this is a little 1, 2, 3 pattern, and this is a little 1, 2, 3 continuation pattern. Over here, we've got a pullback into the rising 20 MA. Now, there's really nothing to the left there, but the rising 20 MA often becomes what we call a self-fulfilling prophecy. And it's our guide to pay attention as prices come down there. And you notice how the momentum slowed in that area. And I'm just going to point out this little breakdown under those bars there after that topping tail bar. And then the immediate recovery. The odds are on your side here. Rising 20, rising 50, strong momentum. What was to the left there? I would suggest nothing, but that would be your next step in your thought analysis. What's to the left? Is there a void? Is it making new all-time highs? Buy it. I'm going to buy there. Apply your money management, meaning how much are you willing to risk dollar-wise? What's the distance to your stop? We typically put our stop a little further down, not immediately under those bars. Share size appropriately and see what happens next. This is the unknown. Don't think about you're going to know what's going to happen. We have good odds of knowing what is likely to happen based on analysis. There's no holy grail here. This is about doing common sense analysis about what is and applying those strategies that you've learned over this series. Now, could you do this with options? Right? This is what Dan's going to get into and show you how to understand options, how to use them, and how to apply them in situations such as this. Now, how do you find these situations? Well, we've developed many scans here, and you will always be able to find opportunities with these scans. I'll just point out a few of them. Bullish wide range bars, 1, 2, 3 patterns, pullbacks to the 20, pullbacks to the 50, bottoming tail bars, bullish 180s, breakouts. What are the trends? And you've got on the weekly time frames, similar. The bearish variety over here, and on the weekly time frame. And here are some monthlies. Now, this scan looks for things that are just going sideways in a relatively sloppy fashion, because we find these are great option trading opportunities for income credit spreads. This scan is going to look for stocks that are in strong upward trends that are near 52-week highs. One of these columns here is going to look for the wide range bearish bars in these particular stocks. And you can see this keeps track on this particular time when I recorded this. There were 400 of these. And you can sort these columns. This ADX that I put in here, you can sort it by the strongest trends. We don't always want the strongest trends. A lot of times we want the medium ones, because those are the ones that may have been consolidating. The strongest ones may be extended, especially if you see this number around 55, 60. And these are the most bearish ones that are in downtrends. And similarly, you could look for ones with bearish bars if I sorted that column there. And then if you wanted to do it with options, well, as you click any of these symbols, it's going to populate these charts in multiple time frames and these option tables to tell you, not tell you, well, tell you what the option strikes are, what the bid and the ask is. I've got these compressed. You can't see it. You can see what the open interest is, which is often great information. But you can see multiple time frames, what's happening. You can apply your patterns. We give these away to Master Trader students. It's a great platform for scanning. Many, many testimonials from students. You can just read through this, but this is something that anybody can do with an education, the experience, giving yourself some time. All our courses come with live coaching, and Dan and I are always available for email support. So it's something you want to consider. My swing trading course covers a tremendous amount more than what we covered here, as well as trading psychology, money management, keeping a trading journal. You can read about it on the site. But now, as I come to a conclusion here, move ahead and listen to Dan explain how you can use options to exploit these opportunities. So all the best. If you got any questions, email myself, Greg at Master Trader. And after listening to Dan, of course, he's available as well for you to listen to him and question him. That would be Dan at Master Trader. Bye-bye.